Generally speaking, it should be a very good year for cryptocurrencies. Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The volatility, the big volatile drawdowns, are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies.
In today's market analysis on Bitcoin and crypto, Raoul shares his outlook on the Bitcoin market, discussing volatility and potential price movements. He examines historical Bitcoin cycles and liquidity patterns to make informed predictions. While refraining from specific price targets, he suggests that Bitcoin still has significant upside potential. Raoul also briefly touches on the gold market, viewing it as a traditional safe haven asset that can perform well during times of economic uncertainty. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Looking ahead, Raoul highlights the immense financial opportunities that will emerge in the next 5 years. He emphasizes that understanding the transformative power of AI is crucial for investors who want to capitalize on these trends. Let's watch Raoul Pal's full video interview.
Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The volatility, the big volatile drawdowns, are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward looking, so it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is, it shouldn't last that long in price or time. And then we've got liquidity all the way through this cycle. Now, if we go back to 2021, the prior post-election cycle, because the pandemic had seen the global economy go down to zero, then go straight back up again, the business cycle peaked really early in April 2021. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US. It was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year on all risk assets.
So if I use similar numbers, let's just use round numbers. It's at 100,000. You see it pulling back 25% to 75, and then take off.
Probably
again
not even. I don't think it goes down 25% because there's ETFs and there's the market is more mature. So let's say let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones.
Do you have any views on gold?
Look, gold is driven by the same thing, which is debasement of currency. It's just doesn't have a tech adoption curve, so it doesn't go up as much. So gold will, considering, again, we're in the liquidity cycle where you have to debase currency to pay your debts, gold should continue to do well. Yeah, I'm bullish gold. And I think that'll continue to do well for the rest of this market, particularly, when the dollar starts falling as well. That's good for gold. So overall, I think it's a very good market for gold, very good market for most risk assets.
In conclusion, Raoul Pal paints a complex picture of the global economy in 2025. While challenges exist, particularly around inflation, debt, and geopolitical risks, there are also tremendous opportunities for investors who are willing to embrace change and adapt to new technologies like AI. By staying informed, diversifying their portfolios, and focusing on long-term trends, investors can position themselves for success in the years ahead. That was a breakdown of Raoul Pal's key insights. Don't forget to like and subscribe for more in-depth analyses of the financial markets. And remember, this is just one perspective. Always do your own research and consult with a financial advisor before making any investment decisions. Disclaimer: this is not financial advice. Always do your own research before investing.